So I'm myself Aditya, cost accountant, uh, practicing for 5 years in the industry, and I'm going to deal with the paper 12. In paper 12, we have two parts, that is company accounts and audit, which is 50 marks for company accounts and 50 marks for audit. Okay, let's go with the audit today. So what is the 50 marks all about? Yes. Section B, auditing has the 50 percentage of weightage. So it has basically 2 points. In this, the auditing topic for the intermediate level of CMA, we are going to have the two major points or two major discussion points we have. One is the basic audit concepts, and second one is provisions relating to audit under the Companies Act. So the paper 12 itself have a good combo, I can say. It is having the company accounts plus audit. In this audit also, we have two parts, that is one is auditing concepts, the basic understanding of audit and its concepts, and second one is provisions relating to audit under the Companies Act, where your company accounts also match to this subject. Okay, yes. Next we will see what all there in the auditing concepts and what all there in the provisions in the company's account audit. So what's there in the 50 marks? These 50 marks, that is 06 and 07. So 06 is the chapter name for auditing concepts. Okay, in this the basic concepts are like this: the nature, scope and significance of auditing, and number auditing engagements, audit program and audit working papers, and audit note books, audit evidences and audit report. Okay, and next internal check, internal control, internal audit and industry specific. So what do you mean by internal check, internal control, internal audit, industry specifics? See, internal controls or internal audits and internal checks are not standard. Those are relatively used and relatively defined according to the industry where it is in. So that's why we said like industry specific. Yes. So next we have the another topic, that is provisions relating to audit under Companies Act, that is 07. Yes. So here what all the concepts we have. So provisions relating to audit under Companies Act 2013, Companies Act only. Okay. And here we are going to discuss the auditor's qualifications, disqualifications, appointment, remuneration, removal, powers and duties. So when we understand the companies need an auditor, so what all the qualifications he should have, that we are going to discuss. When we talk about the qualifications, we need to talk about the disqualifications also. What do you mean by disqualifications? Disqualifications means where the auditor cannot be an auditor for the company. Okay, so what are the points we comes under for the disqualification? And next we are going to talk about appointment. So when and how the appointment can be happen for an auditor of a company, and what will be the remuneration, is there any remuneration, and how it will be paid, and what is the limits for the remuneration and how it will be decided. Okay, and when this qualification, disqualification, appointment and remuneration you understood, you need to also know if you want to change the auditor, if you want to remove the auditor, how it will be dealing with. That will also we are going to discuss, that is removal. And next most important thing, powers and duties. So what all the powers and duties the auditor will have for a company when he is going for an audit. So normally you know that in the accounting standards we will have some powers and we have the integrity and all those things, but what Companies Act is supporting for the powers and duties of an auditor to perform his duties. Okay, that is also we are going to discuss. So this is the one baseline where we need to discuss about the auditor's qualification, disqualification, appointment, remuneration, removal, and powers and duties. This is the baseline. Okay. After that, next, what we are going to discuss in this particular topic out of the baseline, that is cost audit and secretarial audit. These are the two major concepts. So the statutory auditor, the cost auditor, and the secretarial auditor will be the same. or different? All these things, and what is the difference between statutory audit, cost audit, secretarial audit? All these things we are going to understand in this subject. Okay. The next thing was reporting requirements under Companies Act. So what is this? So there is the reporting requirements as per the India's accounting standards and standards on auditing. But in the similar way, we also have some reporting requirements under the Companies Act. What all those and how it should be done, and to whom we need to report all these things. These all we are going to discuss in this particular topic. Yes. Next, reports versus certificate. In this reporting, we have two different concepts, that is report and certificate. So when you form as a company, you need to have basic certifications. Okay. And you also need to give some reports, or you need to submit some reports to the Companies Act. Means it means ROC filings and all those things, register of companies. Okay. So we are going to understand what do you mean by certificate and what do you mean by report. Reports are repetitive, means you need to continuously report that to the company as per your company to the ROC. But whereas certificate, you will get it for the registration and you will have it as a proof of evidence. Okay. So the report versus certificates, all these things we are going to discuss in detail in this particular topic. In report, okay, contents of the report and qualifications in the report. So okay, you are saying that the reports are required. Okay, what do you mean by reports, and what all the contents are there, and what are the qualifications we need to give in this report particular? It means just like it's a format. The format, what it is, how we need to report to the companies, means as a company how you need to report to the ROC, and all the qualifications and what need to be in this particular report, that will be explained in this particular topic. So this is all about the provisions relating to audit under Companies Act. But apart from these, we also going to understand very important, the miscellaneous audit. The name is miscellaneous, but these are the very prominent audits which we are going to have in the society. So let's come to understand what all those. So branch audit and joint audit. So what is the difference between branch audit and joint audit? So there is a separate sections for branch audit, and there is a separate standards for branch audit and joint audits. Okay. So branch audit is an audit where you will perform the audit for that particular branch. Suppose I will give an example. So there is an SBI. So SBI bank need a audit. Okay. So how many branches you have for SBI all over India and all over the world? So a single auditor cannot do all the audits. Okay. So where come you will have individual auditors at the different locations to deal with that particular branch. That is called as branch audit. Okay. Only that branch, the audit will be done by him and he will give the report. And what do you mean by then joint audit? Joint audit in the sense it is not branch audit. The principal auditor who is dealing with the SBI will also share the load and work with the another auditor, and both are appointed as the statutory auditors. That is called as joint audit. Means joint auditors means they are the auditors for SBI. Branch auditors means they are the auditors only for the SBI branch in Hyderabad, Madhapur, or Mumbai, something like that. Okay, they are only doing that for particular branch. But auditor, joint auditor means he's the auditor for complete SBI all over the world or all pan India basis. But the joint auditor means the auditor who share the work and the responsibilities of that with the another auditor, that is called as joint audit. Means where the two chartered accountants or two chartered accountant firms jointly working for this client as a statutory auditor, then that combination is called as joint audit. Okay. Next, audit of shares and debentures. So this is one of the most important audit where which we cannot see commonly in the outside the world apart from the companies where they are listed and where they have the shares and debentures. So this is very, very crucial and very, very perspective in considerations with the companies. So there is an audit of shares and debentures. So what is it? When you have a statutory audit, when you have a bank audits, and when you have the internal audits and operational audit, financial audits, all these things, what is the new thing you are going to do in the audit of shares and debentures? Yes, in this particular kind of audit of shares and debentures, the auditor's keen concentration is how the shares are maintained, the proportion is as per the Companies Act, and how the shares are issued and how the shareholders are maintained. All these things, and similarly the debentures. So all the shares and debentures, how the company is handling, that will be taken care by this audit of shares and debentures. Okay, these all are recommendable audits. It's not like compulsory audits. Okay, audit of divisible profits and dividends. So what it is again? So every quarter and every year, the companies will show their profits and they will go for the dividends if the profits met the targets and if the EPS is as required. So when there is an audit is happening for divisible profits and dividends, it means is the company is giving the dividends on a fair basis with the accurate numbers or not. That will be properly checked and audited as per the accounting standards with which these are dealt with. That we are going to discuss in the audit of divisible profits and dividends. Next, we are going to understand very, very important difference between statutory auditors and internal auditors. Who can be a statutory auditor and who can be an internal auditor? And what is the scope in statutory auditor and what is the scope in internal auditor? And statutory auditor reports to whom, whereas internal auditor reports to whom? All these question marks will be understand in this topic. Okay, next, and whether statutory auditor and internal auditor can be the same or they can perform in the same time, and what is the procedure, and can statutory auditor use the work of internal auditor? All these questions you will get the answers in this particular topic. Okay, next, auditing and assurance standard relating to audit of inventories and audit of fixed assets. So auditing and assurance standards. So likewise, you have the accounting standards, Ind AS and all. So for auditing, we have the auditing and assurance standards. But in this 50 marks, we are not going to understand all the standards, what all there in the auditing. We are going to understand standards relating to audit of inventories and audit of fixed assets. Only these two very, very important standards in the balance sheet we are going to understand. Yes. Next, the last topic, auditing of different types of undertakings. So we know companies, you know sole proprietor, you know partnership, you know local bodies and all, etc., etc., etc. Trust, NGOs, all those things. Okay, so what is mean by different types of undertakings? So auditing of different types of undertakings means where these undertakings are held with a special person or a artificial person that we are coming to. Like suppose example, educations, all the education institutes are run on the name of trust. Hospitals, cooperative societies, banks, trust, municipalities, panchayatis, all these are government related things. These all different types of undertakings apart from the regular format of sole proprietor, partnership, LLP and company. Apart from that, there are different undertakings or exist in the business. All those things, how you are going to deal with. That is what in terms of industry specific. The first point where we discussed, we are going to understand the statutory audit and internal audit on the industry specific. So industry specific means this is what. There will be different undertakings will be there, different controls we need to mention and different reportings has to be there. All these things we need to check on the industry specific. Okay, this is all about the 50 marks. What's there in the 50 marks shows you all this. So this is there in the slide. So before closing our session, I just want to give one small topic, just one small definition, not even topic. It's a small definition. So as we are discussing much about audit today, so I just want to give you the meaning and definition of auditing in just 2 to 3 English phrases. Yes, here we go. An audit is independent examination of financial information for an entity, whether profit oriented or not, and irrespective of size or legal form, when such an examination is conducted with a view to express an opinion thereon. This is what the meaning of the auditing. So what it is? Yes, we'll come again. Audit is an independent examination. So where the auditor has to have the independent examination on what? On financial information. What do you mean by financial information? All the financial statements. Yes, what do you mean by financial statements? Your P&L, balance sheet, and cash flow, funds flow, your trial balance. Okay, information of an entity, whether it is a profit oriented or not. It's not like if you are a profit oriented or if you are not a profit oriented, whether it is a profit oriented or not, and irrespective of its size, legal form. So what do you mean by irrespective of size and legal form? So what's the turnover of the companies, what's the net worth of the company, and what is the balance sheet of the company, and what is the branches the company have, and what is the scale of business they are doing. Irrespective of all those things, when such an examination is conducted, when such examination is conducted, for what? With a view to express an opinion thereon through the audit report. That is what the auditing definition. Yes, if you want to understand more about all the paper number 12, please contact the Sathvidya.